Hey everybody, good morning, good afternoon, good evening, wherever you're in the world. Here where I am, it happens to be about 8:13 in the morning here on September 7th, 2023. It's been a while since I've done a public video, and so I'm going to go ahead and do just that. And as per usual, I'm going to keep things professional and quick to the point. I don't really plan on wasting anybody's time here. So before I get into all this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. If you miss these videos, if you miss talking to me or listening to me, head on over to BitDoctor.org and you can find information on how to join our Discord. And all of the information is there. We're here. We're happy to have all of the members that we've got inside of our group. We have got great conversations going on there all the time. All right, so I'm going to go ahead and get on into the chart. I'm going to start with Bitcoin, then I'm going to talk about the S&P 500 and some implications that I see going on here. So what you're going to notice here on the screen is, I'm not too optimistic going into the end of the year. This chart, and I suppose you probably can't see the time frame very well. Let me go ahead and adjust this. Looking at the time frame, this goes basically into right around Thanksgiving, or this could be extended just a little bit. But taking a look at the chart here, first off, what we can see is on the daily, we're starting to get some warnings that we're starting to see a little bit of a bottom, right? Warnings that the daily is showing, great signs that we could be seeing a bottom here soon. The last time we saw the daily, get into this buying area, let me go ahead and pull out my my little handy brush here. The last time we saw something like this was back here, right? And back here we saw just a little bit of sideways action before we hit a time cycle, right? So that's this time cycle here that I outlined. And we saw a nice big mark up after that time cycle hit. All right, so now, again, we're starting to see these signs again. So, ideally what we would see is just some sideways action, but I don't think that's exactly what's going to happen this time around. I'm going to talk about a couple different things here as we look through this. But again, we saw some signs that you should be buying, and this was in December of 2022. This is when I started getting really, really bullish in the markets, and we had some tremendous plays on ACH, Alchemy Pay. We had some great plays on Near and several other crypto plays. As we saw this, this markup on Bitcoin, we also saw a nice run on altcoins. And I can talk about a little bit about Bitcoin dominance here in just a little bit. But for the short term, or really, going into the next few weeks or even a couple months, I haven't done a public video since the beginning of August, and really nothing has changed. Really nothing has changed. We were looking, back in that time frame, we were looking at, kind of like a wedge pattern here. We saw an attempt at a breakout. It didn't work out, right? And we saw kind of like a falling channel that eventually did break out a little bit. But we hit the resistance area that I had been talking about for quite some time. Let me zoom out just a little bit more so we can just kind of take a look at this, right? So we've got this cluster over here that we've been kind of taking a look at. And this is where we had a previous time cycle and we had a significant drop after that, right? We had a time cycle and we had a drop. And then we had this next time cycle hit, and that's when, things started looking very, very bullish. Well, now we hit another time cycle that was right here, right at the same time that we hit this cluster that I was talking about that would be resistance, and it happened to coincide with this area right here, which again was prior resistance. So naturally, when we hit that again, we're going to start to see a little bit of a pullback, see some resistance in that area. I'm going to just clean this up just a little bit here. And so now what we've got is we've got a nice clean breakdown of this structure. Let me just hide this guy for right now. This structure that we've got is definitely something that we need to pay attention to, because again, we broke down from this, right? We've got several touches here. So we've got, of course, the beginning. We had a touch right here. we had a touch right here, and then of course we had a test here. And back when we were testing that, I thought that we might see another move up before we saw a move down, but ultimately the direction was going to be down, right? The direction was going to be down. The risk was to the downside, and those are words that you should hear, you should pay attention to. The risk is to the downside, and what that means is, we've had a significant markup, and so now the risk is that we're going to fall, we're going to drop. And we've had some significant drawdowns from that. And if you're looking at this from an Elliott wave perspective, let me just zoom in just a little bit here and we can talk about that just a little bit, right? So what I'm really kind of expecting this to be is from this top, 1 2 3 4 5, 1 ABC into the 2, and then we've got this 3 ABC here into the 4, and now I'm expecting a move down to a wave 5. I don't believe that wave 5 is here yet. So, where this stops, nobody knows just quite yet. Again, what I can say is we are definitely looking like we're going to be seeing a bounce. Now, again, how high is that bounce going to go? Nobody knows. This thing could go all the way up here. Really, what it really depends on is how far down we go on this wave 5, how quick it happens, and all of these factors are going to play into what happens in the coming really the coming weeks or month, right? So I'm really kind of expecting there to be a significant pivot point sometime in the middle of October, and that's just a little over a month away. And after we see a nice drop down, we're going to see a nice pivot up, at least going into the middle of October, and then likely we're going to see another drop again, right? And so what I'm looking at this to be really is, a 5, a 3, and a 5 to take us down here. How long is that going to take? Really, again, it's anybody's guess. I have this halfway point here marked from this time cycle to the next time cycle. The next time cycle doesn't hit until, look at this, February 24th. So let's think about all the way back in December of 2017, right? So if I'm expecting that we're going to be seeing potentially a bottom here in November, again, maybe this gets extended into December, right? If we're trying to do some correlations between 2017 and 2018, we're talking 2023 to 2024, right? This time cycle here hits on February 24th. And I don't know if everybody remembers what February 6th, February 7th, 2018 looked like. Granted, that was a long time ago, but that's also when we hit that $6,000 bottom in Bitcoin, right? So we had that $20,000 top in December of 2017, and then we hit the $6,000 bottom in February of 2024. So I'm kind of trying to create a reverse correlation from that time frame to this time frame. And these time cycles, these time cycles have been kind of tried and true over the last year or so. Okay, so these time cycles, we can take a look here and you can see how important they have been. Time cycles do not lie, right? This right here is one time cycle, 2 time cycles, and then again you can see here the 3rd time cycle. Granted, it was on a downtrend, but look what happened after. It dropped significantly again. Now, finally, we had a bottom here where we had a time cycle where we started to move up, and now here we are. We hit a time cycle, and what have we started to do? We've started to move down. So this time cycle you cannot ignore. It is an important time cycle to pay attention to because markets move in cycles, and time plays a factor in all of market movements. Now, what I can say is I haven't found a great time cycle with the S&P 500, which I'm going to talk about here in a moment. But this time cycle, it is a very important cycle to pay attention to. Again, we can go forward. We can see where the next one is going to be. The next one is going to be in September of 2024. And then going in here, I can't go out that far unless I go to maybe like a 3-day time frame. let's go ahead and take a look at here, right? So we've got September 2024 and then going here into April of 2025. So these time cycles are going to be key moving into the future. And so as always, I'm going to be paying close attention to those because I don't have a reason to ignore them right now because they have worked every time since we've seen the top back here in April of 2021. So we're just measuring time, and that's what we've got here. And again, these time cycles have worked out every single time. And I was predicting that when we got here to this time cycle that we would drop, and that's what we've done so far. Now, how far are we going to drop? That's anybody's guess, right? So we've got, the signs of a move down, right? We tried to push back up. It got rejected. You're going to see a lot of news off of Bitcoin ETFs here in the future. And guys, let me just tell you, that is not necessarily a good thing. Something that we all need to pay attention to is when we trade Bitcoin, we are trading based off of exchanges. When an ETF fund, if you will, purchases Bitcoin that it needs in order to back its ETF, they're not going to be buying Bitcoin off of Coinbase, right? They're not going to be buying it off of an exchange because exchanges are not liquid. If you've got somebody that goes and tries to buy $1 billion worth of Bitcoin, they're not going to go to Binance to buy it. They're not going to go to Kraken to buy it. They're not going to go to Coinbase to buy it. They're going to buy it over the counter. They're going to buy it in bulk, and they're going to buy it off exchange. Now, they may buy it through Coinbase, but they're not going to make that purchase on on Coinbase's Bitcoin trading pair on the exchange. And even if they did, they certainly wouldn't do it in one big purchase. They would layer it in, they would place tons of bids over a long period of time, and chances are pretty darn good. You can bet that they have already started to accumulate. And you could probably even make an argument that that is exactly what has happened right here. This markup likely was caused by by these ETF providers that are trying to purchase Bitcoin at as low of a price as possible. So when their ETF starts trading, well, they're already trading that at a premium, higher than they've already purchased Bitcoin. So I only say these things because I think what a lot of people mistake is that an ETF launching immediately means Bitcoin is going to start flying. And fact of the matter is, it's likely going to do the opposite first before it starts to move up. Because what's going to happen is you're going to have all of these people that are buying all of this Bitcoin, up here at these prices because they say that there's going to be an ETF approval, yada, yada, yada. So they're buying Bitcoin at, $29,000, $30,000. And then what happens? ETF gets approved, and then it drops to 20. So they've just lost like 30% of their value. What are they going to do? They're probably going to be like, yeah, I'm just going to go ahead and sell. That's when you should be buying. Right there. That's when you should be buying. You should be buying the blood, not buying the greed, because it's never been a good time to be buying. Most people get screwed when there is greed on the streets. You buy when there's blood on the streets. Now, we don't have either right now, right? The greed was all the way up here when we were hitting 30,000, and we're like, yeah, we're going to go up to 38. I'm like, no, I don't think so. We might go a little bit higher, but we're going to fall, and that's what happened, right? So I'm continuing to do a dollar cost average strategy, and I've been doing it all year long, and so I'm happy with what I've done, and my dollar cost average is still well below or near where we're at right now. But the long term still looks good, right? Granted, back here I said, yeah, we're probably going to bounce and then roll, but I wasn't saying, you should be buying right here, and if you do, you got to manage that risk appropriately, and you should probably get out when we've got these lows, because if it breaks this, we're going to be going down. My targets to the downside, well, currently I'm looking at about 22,200, but if this takes a little bit longer, it could be that we go all the way down here to 20,000 before we start to see really a dramatic move to the upside. And this is all going to adjust as time goes by, and we will kind of keep at least the Discord group up to date on what this is going to look like. But it looks like we've got a 5-wave move that's going down that isn't complete. There is some evidence to say that it could be, right? We do have a slightly lower low right here compared to back here, but I don't think that this is done. I think we've got a little bit lower to go. Then I think we've got to move to the upside again, going into about the middle of October. Then I think we're going to start a steep move to the downside. What's going to fuel that? I'm not really sure just quite yet, but it could be that it's going to be fueled by the dollar index. Okay, so I've been watching this for a long time. So this should not be a surprise to anybody. I've been watching this for a long time. I've been watching pivots. I've been watching areas of support and resistance. And I think that the dollar index, in the weeks to come, again, this is going into 2024, 2025, I think that we could see, the dollar index going up to 120 to 122. I'm not sure that it's going to go up much higher than that, because what is likely going to happen if we do see a big bullish move on the dollar index moving to the upside like this, it's likely going to be pretty catastrophic for equities. It's going to be pretty catastrophic for Bitcoin. But once the dollar index starts to drop, that's when you should be buying equities. That's when you should be buying Bitcoin. That's when you should be buying Ethereum like it's going out of style. Because what you're going to see, once we get up here to this area, that's going to be a significant area of resistance, right? That was resistance all the way back here at the dot-com bubble, right? So if we see this, this is going to be, it's going to be pretty catastrophic for, again, for equities and probably crypto and things as well. Obviously, crypto wasn't around back here. Crypto didn't really get launched until the dollar index was absolutely atrocious, right? And probably is one of the reasons why crypto has appreciated so well in value and maintained that value over time. And that maintenance is really important as well, that you should be paying attention to. I can talk about that a little more in the Discord if anybody is interested in that. But when we see the dollar index get up here to this area, again, the risk is going to be to the downside. I don't see significant upside in the dollar index once we get to that 120 to 122 area. I would say that that would be a great time to be getting into equities. That is probably a good time to be getting into equities, because chances are, if the dollar index does that, equities are probably going to be looking pretty nasty. And again, I'm talking like over the next 12 to 14 months, 12 to 15 months, right? So we're talking, over a year away, there is a chance that the dollar index will see a significant move to the upside. So let's talk a little bit about the S&P 500. So I'm going to go here to SPX. I'm going to go back here to a daily time frame, and I'm going to talk just a little bit about what could be happening. So if there is a bullish case for the S&P 500, this is what it is. I'm going to go to a 4-hour just to keep things just a little clearer, right? So right now, what I'm kind of expecting is a move back down here to about 42.85 or so, really to stay in this channel. If it breaks down out of this channel right here, right, and I'm going to just kind of highlight this guy just a little bit here just to make sure I've got the right one. We've got this guy right here. Let me go ahead and change its color to, we'll change it into red, because I think it's kind of an important level to pay attention to, right? So this red line right here, this is really our point of no return. Right now, I'm looking at this as sort of like a 1 and a 2, right? This is a big bullish setup, right? This would mean that the S&P could be going to new all-time highs, not necessarily by the end of this year, but going into next year. Right? So if the dollar index rolls over, this is going to just absolutely fly. And this is going to be that bullish case to go to the upside. All right, so looking at this, we're looking at a move down here and retesting this area. And keep an eye on your indicators. Keep an eye on your indicators. And again, if you're using the Wavemaster indicator, we're always going to be watching that. The 4-hour flashed red, and look at what has happened so far. We've seen a nice pullback. Now, the news, that's just icing on the cake. Nobody knew that China was going to ban Apple devices. Gosh, this sounds familiar, doesn't it? Like when China banned Bitcoin. Like, who cares, right? It's just noise. It's noise designed to steal your money is really all it is. So, excuse me. All right. Looking for a move down here to 42.85 or somewhere in that realm. And if we break down from that area, it means, I mean, it's not great. Let's go ahead and talk about what that could mean. All right, so I'm going to go ahead and clear off this chart just in case there's anything on here. I'm going to go to a weekly. This is going to be on the S&P 500. If we do roll over from here, excuse me, and we break down from that level, basically what that then means is now we've got to take our measured move here. We've got our dominant pivot high, dominant pivot low. Let's take a look at our pullback. So what we would be looking for is a move down to the 100 or the 123.6. The other thing I'm going to do, and I'm just kind of setting things up for you, right? If we break down from that 42.85 level, which we're really not far away from, we're only like 50 points away from it right now. Let's take our fib retracement tool, dominant pivot low here, dominant pivot high here. Okay, we've got this. Let's go ahead and move things over. So where is our 50? Where is our 618 and our 65? Well, it looks to me like our downside areas that we would really need to be paying attention to is going to be this area right here. That's going to be at about 3,100. And then our next area is going to be right down here. And it's going to be at about 2,750. These are two areas that you have to pay attention to that could be the downside targets if we do roll over from here. And if we do, well, then again, our chances are increasing that we're going to see that move go all the way down here to these two areas. And if we look left, right, let's just go ahead and zoom out some more. This level right here, at this 2750 area, I mean, that's going to be pretty darn important. This level right here. Okay, I'm just going to go ahead and outline it. There is no coincidence that that happens to fall right near the 786. What I'm looking at, just in case you're curious, is this pivot here. We've got this pivot here. We've got these pivots here. And then, of course, we've got a little bit of clustering right here. And then, of course, a little bit of clustering right here. When I say clustering, I just mean we had, you know, an extended period of time of price acceptance in that area. And it happens to be, again, at that 786 level. If, by some stretch of the imagination, we do go to 2750, it's going to be a great buying opportunity. It's going to be a great buying opportunity if we get down there. And that's a big if, right? I think it's still too early for anybody to tell that the price is going to go all the way back down here to this area. Because fact of the matter is, you know, we haven't really broken structure. And I'm looking at this right here, you know, a potential move down here to this 42.85 level or so. Breakdown out of this. And again, let me just throw this channel on here just so that you can see it on a cleaner chart. And we can just kind of take a look at this, right? So we've got this guy right here, moving up here like this, right? And again, let me just zoom in, and I'm on a weekly. I could go down to like maybe a 3-day time frame just to show a little more clarity here. So taking a look at this, what do we have? You know, again, we've got some pivots that we need to pay attention to. Let me clean this up a little bit. All right, so we've got two pivot points here, right? We can all agree this is 2 pivot points. And then we've got a pivot point up here. Now, we haven't really hit the top a second time, but we don't have to. What we can already see is there's already, price agreement at this median line, and we tried to poke above it, and we rolled over, and we're starting to push down. And even right now, we're starting to push down just a little bit more, right? If we go to an hourly time frame, I mean, futures don't look all that great right now. And again, I'm not saying that we're going to go straight to 42.85. You know, fact of the matter is, I don't think we are going to go straight to 42.85. But again, if you're taking a look at this from an Elliott wave perspective, what do we see? Well, from the top, we see a 1, 2, 3, 4, 1, 2, 3, 4, 5. So there's 5 waves here. Okay, so we've got 5 waves. Now what do we have? Excuse me again. We've got 3 waves. A big 1, 2, 3, or an A, B, C. Let me go ahead and throw that on the same degree so it looks uniform. All right, so let's just take a look at this. So we've got 5 waves down. Yes, this looks pretty choppy right here. I'm not going to dispute that. That would be something that I would consider kind of throwing a little, at least in my opinion, throwing a little skepticism on the count. But for right now, what we're in looks like a wave 3. It looks like we're in the middle of a wave 3 to the downside. What would be our downside target for this? Again, I'm going to just kind of zoom out a little bit here and compress. And let's go ahead and use our handy dandy trend-based fib extension tool, as we always do. Dominant pivot high, dominant pivot low, and let's get that pullback. What is our target to the downside? Well, the 100 is sitting here at 42.72. Okay, well, that's close to my 42.85 target. 42.85 is just right here. And again, staying in line with the channel, if we go down quickly, we can stay with that channel pretty well. Now, if we were to hit that target at the time where the channel would also be intersecting, that's going to take us right here to about October 3rd. So that's a little earlier than what I was discussing previously about Bitcoin having, a window there around October 15th, right? So are we going to hit that downside in October, or is it still going to happen yet in September? Now, we're only 1 week into September. Lots can happen, between now and the end of September still. The trajectory that we're moving down does look like a wave 3. So if we break down out of this structure, so again, that big if that I have to pay attention to, right? If we move down out of this, we're going to be taking a look for a move down here to basically 4,100 to 4080. 4080 to 4100. Chances are pretty good we're probably going to get down here to this 175. The S&P 500 loves to go to the 175, and if that's the case, right, what we're hoping for and what we're wanting is an A, B, C, right? So kind of getting down here, giving it some time. And this is going to be on a higher time frame. This is what we want. This is the bull case. Now, what's the bear case? What does the bear case look like? Well, the bear case would mean that we have finished a significant correction from the all-time high, and now we're working on a 1, 2, and we're now working on this 3, 4, 5. Again, that would be on a higher degree. This would be the bear case. And I know the red, letters don't really look well on here, but let me just go ahead and change that just because they don't look all that great. So I'm going to go ahead and use this color. It's not a whole lot better, but it still works. Now, this would be, if this is a significant bear case, right? And we're talking, if this were to happen, this would be the fuel for the dollar index to start just rocketing towards 120. If the dollar index does start rocketing to the upside, this is the likely scenario. The likely scenario is that we've got this as a 1, 2, and then we start to make that move. Again, we were just talking about this. We're starting to make that move all the way down here to these targets, right? So this would be basically, starting up here at the top, we'd have a 1 and then a 2, a nice healthy pullback, right? And then we've got this 3, 4, and then a 5. This would be the ultimate bear case, right? This is what bears want. This is what they thrive for. This is basically their euphoria, right? So we're seeing this move come down here to about 38.65 for a larger wave 1. We see a nice retrace up here. Let me go ahead and just remove this guy for right now, just to clean things up. Looking at this and just kind of zooming out so that we can see this with a little more clarity, right? So we'd be looking at a wave 1, a nice pullback for wave 2, and that's not insignificant either. So we're talking about, a 10% move on the S&P 500. If you're playing with SPXL or just conservative ETFs, bullish ETFs, I mean, that could be, 25 to 30% move to the upside, because you have to figure that there's going to be a little bit of decay in there, right? But then, moving back up here, watch your indicators, because again, this is all, kind of projecting that we break out of this channel, right? That this is a bearish channel that we were in and we're going to be breaking out of it. And if that does happen, watch your indicators. When you start to see signs that we're getting overbought, right? Getting to a signal where we're overbought in price action that's fallen out of a bearish channel, you're going to be looking for those short setups. And that would be, in this case, a move here or right around this area, assuming that we do come down here, find the support here, which would make a whole lot of sense if we found some support here. Because again, look left. What do we have when we look left? And I talk about this stuff all the time. Where's prior price acceptance? We've got tons of price acceptance right here. This would be a perfect place to bounce for a wave 1, then go up here to a wave 2. But then now we're talking about breaking down below even that 3,500 level. Break down below that. Well, where's our next areas that we should be paying attention to? This 100 makes a lot of sense. Well, why? Well, because that was basically the area where we had the previous highs, right? We had a high here, we poked a little bit higher and died, right? So if we do come back down here, we're probably going to find some support there, but more or less what I would expect to happen if this bearish case does happen to work itself out, from this wave 2, probably we're going to see a 1, 2, 3, and then kind of, a little bit of a sideways action for a 4, down here into the 5, into the wave 3, go up to the 4, and then down to the wave 5. We start breaking down below these structures. I'm saying that we're probably going to see the wave 4 around here. Why? Well, again, look left, price acceptance. What do we have if we take a look left? Right here. And if we even go further, right here, this whole area right here, again, price acceptance. Where did we find significant price supply and demand, right? So we had supply back here. We had significant demand back here. So if we break down below it and we consolidate below it, right? So maybe it looks a little bit like this, which is entirely possible. We could do a little bit of this dance. Break down. Well, we get back up here, get that as resistance again, right? So you run into that supply. Then you start to see another move to the downside going into, again, 2025 or 2026. Again, this is the extreme bear case. And we're talking like a year or two away. So you shouldn't be making investment decisions based off of something that's, kind of projecting that far out. Because fact of the matter is, things still look like they could be extremely bullish right now. The big key is finding that support down at the bottom of this channel. If we can find that support there, then the chances are pretty good, actually, that we've got a 1, 2, 1, 2. That would be pretty darn bullish. And that would be basically saying that we're going to be making a significant move to the upside, which, again, could take us all the way up here to 5,500 to, closer to 6,000. That sounds crazy, but it's not out of the realm of possibility. It is absolutely entirely possible that something like that could happen. And I'll keep you posted. One last thing I want to talk about is Bitcoin dominance, right? Because everybody's like, when's alt season going to get here? When is it finally going to arrive? So again, I believe that Bitcoin dominance has topped out. I believe that we do have a top out on Bitcoin dominance, at least for right now. And alts don't seem to be all that bad. And I know this chart probably looks a little funny, but what I've been keeping an eye on here is range expansions, right? So we've got a good range here. We've got a good median here. And whenever we get up here into these extremes, the upper and the lower extremes of this range, we typically see a pivot, right? When we got up here, I was talking about, we're probably going to go down here into wave 4 and then move up here. I was really looking for a move up here to 50.17%. Obviously, we went to 52.19%, which that's pretty good. But now look at this. Look at the wave structure from the bottom. It's worked out pretty well. We've got a nice little 1, 2, 3, 4, 5, a leading diagonal into a wave 1. We've got a wave 2, and then I've got a wave 1, 2, 3, 4, 5, an extension here into the 5th, going into this wave 3, and we've got a 4, and then a 1, 2, 3, 4, 5, going up here into the top. All right, so this likely is completed for now. We've got a nice structure, a nice move to the upside, but now what have we started doing? I'm going to kind of compress this a little bit and move it over to the left. What do we have? Let's just go ahead and take a look at it. It is what it is. 1, 2, 3, 4, 5. Now, does this work? Does this structure make sense? Well, let's go ahead and zoom in just a little bit more and see if we can't make a little bit of sense out of this price action right here. Okay, so again, 1, 2, 3, 4, 5. Well, we did not violate. So this wave 4 did not violate this wave one. So this, in my opinion, is valid. Now, what do we have? Well, we're talking about Bitcoin potentially going down over the next couple weeks. Well, this would be the fuel for altcoins to maybe bleed just a little bit, right? So let's just take a look at this. If this is what it is, well, chances are pretty good. We've got this A, B, and then a C going on, right? This is an option, right? Because again, we're also taking a look at Bitcoin potentially being in a 1, 2, 3, 4, and then a 5. So is this 5 in or is it not in? I tend to believe that based off of the timing, I would tend to believe that this 5 is in. Now, Bitcoin dominance is going to increase. That means that altcoins are probably going to bleed a little bit. But make no mistake, when we get back up here, right? So again, let's just go ahead and measure this. Now, again, we're measuring dominance. We're not measuring price action necessarily. Getting up here to this 50.53% or maybe even as high as 51%, I would say that that's going to be a time period where we need to be taking a look, more seriously at altcoins, because chances are pretty good Bitcoin dominance probably is going to decrease going into the end of the year, which means altcoins probably are going to see a significant move going into the end of the year. So pay real close attention to this. And if we get back into the zone, and I'm not talking about auto zone, but if we're getting back into the zone here, that's going to increase confidence that alt season is among us, right? Typically, when alt season comes, you don't realize it until it's like halfway over or it's over, right? Because when people start talking about alts, well, chances are pretty good that you've missed the boat, right? Because you don't want to be trading with the herd. You want to be trading against the herd. And if everybody is bullish and I'm bearish, who's right? We'll just see as time goes by. But again, paying close attention to Bitcoin dominance, because fact of the matter is Bitcoin is king, even though there are 10,000 or more different altcoins and crap coins and just bull crap that's out there, right? Altcoins are there for no other reason than to take your Bitcoin. That's the only reason why they're there. There's no reason for altcoins to exist otherwise, with a few minor exceptions, right? I'm not going to talk about what those exceptions are. That's not the point of this video. But altcoins are just there to steal your Bitcoin. Everybody is in the market to get Bitcoin for the most part. There are several altcoins that are going to outperform. They're going to perform very well. But you just need to make sure that you're paying close attention to and not trying to buy the bottom, because that's a fool's game. Because fact of the matter is, buyers make new lows. Buyers make new lows. You're creating liquidity for people that are trying to sell. Buyers make new lows. Sellers make new highs. When everybody was talking about, 24,000, that's the high. 25,000, that's the high. As we were on our way up to 30,000, right? Finally, we eventually got to 30,000. Well, what ended up happening? Like, okay, well, now we're going all the way back up to 38,000. You started seeing those predictions, right? That's, that's just, it's just classic. It's classic. Try and be a contrarian as much as possible with reasonable targets, with reasonable position sizes. Don't oversize. Be conservative with your positioning and diversify. Don't go all in on one thing. Try and spread your cash around, a number of different things. Because if you're expecting altcoins to go up 400-500%, well, you can spread, let's say $100. You can spread $100 5 different ways and put $20 in each one. And if one goes 500%, well, that's great. You just basically turn that into, $100. You got your return on investment. So now, if the other 4 just kind of do mediocre, well, okay, maybe you just sell them at break even if they don't do anything. But if they go up 100% or 200%, well, now you're doubling that money. That's really where diversification pays off. Because if you get into the right one, that's great. But if you get into the wrong one, well, now you're going to start scrambling. You're going to start scrambling because you take all of your money, and let's just pick on Ripple for a moment. Take all of your money and put it all in Ripple, but then Cardano decides to take off. Well, what's going to end up happening is you are now playing with rotation, and you're going to be selling Ripple at maybe a mediocre gain to go into Cardano, which has already had a significant gain. And then now Cardano is going to go up maybe another 20, 30%. Then it's going to start rolling over, and you're continuing to watch it because you're like, it's just a pullback, it's going to keep going. Meanwhile, Ripple is over there and it's just ripping, right? So Ripple is now going to be going up that 200-300%, while your investment in Cardano is now basically a break even, and you're just playing a fool's game. So diversify and put your money in multiple places, so that way you can take advantage of the rip while the other ones are just still sitting and waiting. And then you can cash out of the rip and maybe take that money and put it into some alts that haven't moved, or some of your existing investments that really haven't moved a whole bunch. But again, don't go all in on anything. That's not smart. That is not smart. If anybody tells you to do that, they don't care about you. They're basically giving you bad advice. Not that I'm giving any advice here. I'm just telling you what I would do, right? I would not go all in on anything. I might do a little bit of a heavier position size if the setup is right and my indicators are telling me that the setup is good, but I would never go all in on anything. That's a fool's game. All right, guys. I think I've been going for long enough here. I've been going for, 41 minutes. Good gravy. All right, I'm going to go ahead and end things here. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share. If you need access to the Wavemaster indicator, the Momentum channel indicator, if you need access to our LTRO bot that we just recently launched, let me know. Let me know. I'll be more than happy to oblige you. But you can find all that information on BitDoctor.org. Get access to our Discord. We will be more than happy to chat on there. And again, last but not least, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everybody.